Okay. All right. Of course, this is already 10 p.m. In China. So today, let's start our weekly webinar. All right. I'm going to talk about euro, dollar, gold, oil, right, and other major currencies, and some of the future products like S&P indices and Bitcoins, maybe. All right. So the first thing we're going to look at is dollar index, right? DXY. So DXY, we have in daily chart. All right, it's another rally, okay, since the FOMC meeting and after the ECB news, right? And this time we actually found that the DXY has already, found a support from the neckline here, right? So this is we call neckline. A neckline actually represents a previous resistance place, right? And form a bottom. This is actually we call it a V shape, right? This is a V shape bottom. Okay, you can see this V shape. Anyone can see that? Can you see that this is a V shape? Do you agree? If you agree that, you can just give me one, right? Just reply me by one. Okay, good. All right, so this is a V-shaped bottom, and the neckline is here, and we can see that this now the previous resistance now becomes support, right? From the price action, we can see that the price rally, okay, break through this neckline and pull back to the same place, and all the sellers now become buyers. Why? Because the sellers are losing money, and they're finding some place that they can escape from their previous losing positions, tend to break even, so they want to escape, right? And for buyers, all right, it's a very good time to buy the pullback. Okay, and now we can see that this DXY has been sit nicely on the 96.80 level, and we found a very, very unique candle patterns, right? What is this? What's this candle patterns? Can you tell me? IB. What is IB? Because we have a lot of new students here. Yeah, the full name is called inside bar, right? This is inside bar, right? Okay, so the inside bar that's already broken up, right? So by the logic of inside bar trading, right, you should actually enter or buy when the price breaks through 96.96. Correct? Yeah, our strategy is to buy the breakout. Okay, so just now when breakout happens, you should already enter or buy. And our target is first is 1 to 1, second is 1 to 2, or maybe 1 to 3, okay, or even higher. Okay, but this inside bar breakup actually gives us an intention that the DXY has found support, right? Because if DXY is not supported by 96.80, can we see an inside bar breakup, or we will more likely to see an inside bar breakdown? Do you agree? So we have actually make a conclusion, right? The inside bar breakup, okay, tells us, okay, DXY found support. Am I right to say that? Because if there's no support from here, the buyers are disappearing, DXY is likely to break down instead of break up, right? Okay, so this is actually give us a intention that DXY is still rallying, right? So let's go to the 4-hour chart and we'll see what happened. Okay, yeah, we see a lot of testing of this place, right? We saw a lot of testing of 96.79 level, okay? 1 test, 2 tests, 3 tests, 4 tests, and neither of these tests can break new low. Do you agree? None of them can break new low. And it breaks up, okay? Breaks up and finding a new horizontal sideways zone, and it's likely to goes up, right? Yes, Paul, I agree with you. We have a double bottoms, right? In this in this lower time frame, we actually can see these double bottoms. Right, this is good patterns. Okay, the double bottom has already break the neckline, and if you want to buy, you can start to buy now, right? Because by the definition of 2618 trade, we can actually buy the double bottoms after it formed, and we can buy the 618 pullback, isn't it? Right. So the ideal place is to buy the DXY 96.87, right? But we can find that this 1, 2, 3, 4, 5, 6 candles has already been testing 96.91, and this is only 0.04. Okay, dollar. It's actually 4 cents difference. So there's no point that you just wait for the perfect 618. In this case, we can actually buy the whole Fibonacci level retracement, okay, from 96.91 to 96.87, right? So as long as you believe that this is double bottoms and this is a pullback, you should actually go inside, go with it. Okay, for those who understand my logic, please give me 1. Okay, try to follow my logic, okay, follow the reasons that how I analyze this chart, how I find those, you know, patterns, right? It's important, right? It's important. Okay, good. All right, so DXY is likely to find support and it's going up, right? So what happened to euro? The euro, we can see a breakdown, right? So let's go to 1 hour chart. You can see, yes, it actually breaks down a neckline already, okay? We find a drop-based drop, right? And pull back. So if the euro stopped rallying from 1.1320, right? Because we can see here in 4 hour chart, okay, the euro has already been testing the previous structure here, okay, almost, right? Not yet touched. And it actually failed to break new high. Okay, by the definition of fail to break new high, we can see from the price action, okay, this is one attempt, this is the second attempt, okay, fail to break new high and breaks new low, right? So if you understand or you remember what I have taught you guys, what can we do now? Can we sell this structure breakdown and pullback? Can we sell it now? Can we? Double top, break neckline, right? In 4 hour chart, this is a firm candle that breaks down, right? Out of this structure, and now it's pulling back to testing, retesting, right? So it's actually a good time to short the euro right now, and just put your stop loss above new high. That's it, right? So let me just show you how to calculate the risk, right? Say for example, we want to entry, our entry is 1.1302, okay? Our stop loss, let's say we put 1.1326, okay? So the risk pips, right? How much? Is about 24 pips, right? So 24 pips. The risk, okay, of course, we are short, we are selling. So we have to add the spread. The spread normally, okay, we give maybe 2 pips. Okay, and we give another like ATR's average true range, right? So for example, the euro moves 100 pips a day, so we have to give at least maybe 5% or 10% of the ATR of daily ATRs, right? So our 5% of 100 pips is about 5 pips, right? Okay, good. So let's give 5 pips. All right. So in total, the risk we managed to take is about 31 pips. Okay. Or close to 30, okay? Let's just take it at 30 pips, okay? So if I have 10,000 in my account and I'm willing to take 2% of my capital as a risk, so I should only risk US dollar 200, right? Okay. If we trade one lot, we sell one lot, okay, per pips cost is $10, okay? So we are going to risk 30 pips. So 30 pips times 10 equals to $300. And we are going to only risk 200. Therefore, the lot size is how much? It's 200 divided by 300, right? I sell one lot, I will risk $300, but I'm only okay to risk $200. So I use 200 divided by 300 equals to 0.66 lot. Okay, done. Right. So this is our trading plan. We have already calculated. Okay, so we should sell the euro now at 1.1302. Right. If you sell just now, you will already have the 2 pips winning. Okay, and stop at 1.1326 plus 30. So it's about a 1.1356. Okay, 26. Okay, so we add another, add another 7 pips, so about 1.1333. Okay, put your stop loss here. So let me just slightly move up. Okay, all right. Okay, good. So by putting stop loss here, I'm risking this much. This is my risk. Okay, let me just put it as red color. This is my risk. Right? Where's my target? My target is at least 2 to 1. Right? 2 to 1. Okay, 2 to 1 here. So my target is about 1.1240 or 38. So this is my entry, this is my stop loss, this is my target, right? Okay, then we should just pull the trigger, right? Pull the trigger. And let's either risking 2% or let's take the profit of 4%. And the correct loss size for 1,000 for 10,000 count of $200 risk is 0.66. Done. Right? So are you clear? How many lots you should risk? If you are willing to risk 200, you should trade 0.6. If you're willing to risk maybe $20, you should put like 0.06, right? It's just calculated by this way. Understand? Are we clear? So if you're clear, just give me 5. All right, give me 5. All right, so let me just do a survey. How many of you have already entered the trade? How many of you? Yeah, this is a trading plan. If you agree, you just go for it, right? Go for it, because by doing this, you are very, very 100% sure that you are not going to risk too much money. You're only going to risk 2%, right? If we lose this 2%, are we okay? Yeah, we'll be fine. And nothing can take all of our money, right? There's no heavy damages. Okay, so we're just risking 2%, but we're aiming for 4%. Okay, by setting the TP level at 1.12. Okay, so TP is 1.12, 37 or maybe 35. Okay, so this is TP1. So then where's TP2? So normally when the price hits the 2 to 1 risk reward ratio, we are going to close at least half of our positions, right? If you remember, okay? Okay, and can the euro break going down even more? Maybe, right? Maybe. So if that happened, where will the euro stop? Okay, so we're going to find the left, and we find a very good strong structure at 1.1212 or 1.12 even handle here. Okay, maybe here, right? So if price drop to here, I think, because you're going to hit the previous support, so it's better for you to take all the profit or close maybe 75 or 80% of your trade and let the rest, okay, hold the rest. Can you please show how you identify neckline with one more example, right? Very easy, okay? The thing is you need to identify, for example, here, you have to identify a double top or a V shape. Okay, a double top, the connection point here, the connection point is a neckline, right? The neckline here. So when the neckline was broken, you find a pullback and you take a short and you make a lot of money. Okay, but not always you're going to win. Sometimes it have this breakdown and pullback and then boom, it hits your stop loss, right? So you have to take the stop loss, right? But generally speaking, this neckline pullback, right, have about a 75% of winning ratios. So it's also good to take the chance, right? So I hope that by doing this, you can understand, right? Okay, for example, here, you can see there's another neckline here, right? You find that, okay, the price has already break the neckline here, the connection point, right? So find the pullback, you should actually buy from here, okay, buy from the neckline pullback, or using 618, using Fibonacci to help you to decide where you want to buy, okay, and put your stop loss here of the previous low, okay, and then you will enjoy a rally, or you will enjoy a stop loss. But when you stop, you only risk 2%, but when you win, you will win 4%, right? So if you calculate this risk, right, so for this trade, it's actually giving you about close to 1.2. Yeah, actually it gives 1.12 risk reward ratio, right? So yeah, that's a good trade. Okay. All right, good. So I hope that you have already entered the trade, and let's see what will this trade give us, the profit, right? Okay, let's go on sterling. Okay, sterling is in a big triangle, and today it has broken a minor trend line here, so I think it will not break up. Okay, more likely it will just fall as long as the price is below 1.3120. Okay, and this fall tells me the sterling is going to make a big move. All right, because you see daily chart is a super big triangle. The price has been consolidating since March, right? March 11th, consolidating about 1 month, okay, and above. And if the price break down the triangle's bottoms lines, what will happen, guys? What do you think? What do we have? Will the sterling drop like waterfall? Will sterling drop like crazy, right? Testing the maybe 1.29 or 1.28, 1.26. Is that possible? Do you think so? Like a rock? No, rock is going up, right? We should like a rock. You are right, because we have gravity, right? Not like a rocket. Rocket is going up. Rocket is going down. You're right. All right. So my target of my sterling short, right, from 1.31. Actually, we take a lot of sterling short from the last month. If you remember, I said we can sell the sterling of this neckline pullback. Okay, we sell from 1.32. We sell from this structure broken from 1.3170, right? We sell from the latest structure from 1.3120. It all makes money. And all you need to do is to wait for the big four, right? And this time, I think it will move to at least 1.2855, which is here, the supporting level, and it's also a neckline level of the previous double bottoms here, right? Okay, so just be ready to enjoy the profit of the sterling short. Happy with that? This is our analysis, right? I'm not saying that 100% time I'm right, but it's likely to happen, and we are holding our shorts from the high. We sold from here, right? If you remember in my previous webinar, we sold from here. It's all structure pulling back, okay? All from the trend line resistance, okay? So enjoy the four, guys. Where's your claps? Yeah, how many of you still holding sterling short? If you follow me from my trading view, from my YouTube, from my webinars, from my Facebook pages, right? I have mentioned a lot of times, because I have told you guys sterling is going down, right? Going down, right? So just hold it short, right? Enjoy the profit. Okay, good. Yeah, nice one, yes sir. All right, so let's go for another pair we call sterling yen. Right, sterling yen, same thing. And just right before today's start, I actually post a chart in my students group. Right, if you remember my students group, right? Remember? Hey, my students. Right, in the morning, actually I told you guys that, see here, sterling yen, right? We can short. Right, in the morning is actually the price you can see here is 146.71, right? If you see this, when I publish this, my idea here, 146.71, right? And look at it here now. Where are we? 146.08, right? So do you make money? Do you make money? And for those in my Chinese students group, I have told you guys to short from here, from 146.30. right? I said it breaks down and we can sell the pullback, right? Do you remember? All right, where's your trade? Where's your short? Are you still holding that? Are you happy with that? Because we have an instant profit, right? Breakdown, pullback, and short, right? Yes, boom, bingo, we have money. Right? You're doing about 30 pips. Okay, good. That's very good. Okay, so I think I'm going to take some profit because I have also take this trade. So let me just take some profit, right? Okay, it's actually easy money for this. Okay, it's easy money. Okay, so let me just put into my chart here. Okay, I have sterling yen. So okay, good. I have made it already 1,000 US dollar profits. Right? Good. Wow. Good. It's still going down. Okay. So I think, yeah, I should close at least half. Okay. Right. And I should took my stop loss to break even. Right. Okay. So let me just put my stop loss to break even so that there's no more risk of my trades. Okay. Good. Right. So by doing this, I have a risk-free trade. Do you see that? Right. You see, okay. You see, I just move my cursors. I just click left and click right, and I just close my profits, right? Okay, but you have to understand why I'm doing this, okay? Because I take the short from this pulling back, right? I sold from 146.28, and for intraday trade, I have already win 30 pips, so that's why I took some profit, right? Okay, so you can see I have already took the profit here. Okay. Okay. Yeah, I made about $700. Okay, and now guess what I'm going to do next. You see, I closed the profit at the lowest point, right? And now the price is pulling back. What can I do now? Where should my stop? Here. Look at the red line here. My initial stop is here, about 146.50. Okay, I just put the stop loss above this pin. Okay, this is my initial stop loss. And now I have moved the stop loss to break even, which is moved the stop loss to my entry point. And you can see here, my stop loss is actually close to my entry, and that which means I have no risk of this trade. I can just simply hold it, right? So I can take my profit at an even lower level, right? Okay, where is the sterling yen likely go? I can tell you guys, this time is likely to test here. Do you see this? There's a gap. You see this gap here, right? I think the sterling yen is likely to fill the gap at 142.40. All right, let's say I put my profit level at 142.50, right? Just 10 pips above the gap, right? By doing this, I'm actually having a zero risk trade. But if this trade works well, I can win $6,780. Do you think this is a good idea? Number one, this trade is not going to give me a negative result, right? I have no worry about this trade. The worst situation is this profit of 200, the floating profit becomes zero, becomes $10, right? But it's okay because I have already take $800 from my pocket. I have already earned $800, and then I have this we call risk-free trade, or we call the lucky, Angbao trade or red package trade, because China people, we love Hongbao, we love red packet. Okay, so this red packet trade will give me a potential win of $6,700 while I'm taking zero risk. Do you want to have this trade or not, guys? Do you think my action is a good choice? Do you think I'm doing the right thing? right? You see, the price already broken down, right? And the bearish trend starts, the bearish trend really starts, break the long-term neckline here. This is neckline broken, right? So if the price never give me a stop loss hit of my break-even stop loss, right? I would just hold the trade. I can just hold forever. 0 risk, 7K reward. Can't get it better than this, right? Yes. Yeah. Well, let's do it, right? For those who haven't entered the trade, then you have to take the bad result of, by chasing the price. Okay, for example, you haven't entered the trade, but you still want to enjoy the fall in the future. What can you do now? You have to go to the smaller time frame and go to find a pullback. And this time, since the 30-yen has already made a lower low, you see here, lower low here, already created. So I think the best place for you to re-enter the trade or you to catch the fall is here, the new structure, right? It's 146.20. Okay, good. So yeah, just find the pullback at 146.20 and take the short, right? Maybe you can catch the next trend. Understand? Okay, and I hope that all of our traders who have short the sterling yen and sterling dollar will make a big profit. Yes, there's always a probability of a 618 on the pullback. Yes, you are right. Okay, but if the price pulls back to my entry price, I will just exit the trade. Right? However, in a trending market, what you should do is to follow the structure broken and retest. Okay, screen size please maximize. Okay, I'm trying to. You can. I think you can still see my chart, right? That's enough. Oh, okay, it's broke down. Wow, cool, boys. I think we have a very nice trade today, right? You can see here it's still making a lower low. Oh, okay, good. All right, you can see, this is actually a good structural pullback, right? So just continue forward, continue sell. Now the floating profit I get about $400, right? I think, yeah, it's going to winner chicken dinner, right? Yeah. Okay, so 4-hour chart, a double top formed. Daily chart, sterling yen just create an inside bar breaks down. So in whatever time frames, you should already catch the trade. Catch the trade, right? So yeah, good. Let's just watch. Oh, okay, $400. Okay, lower lows, drop base drop. Right, so this is what we do for the market, right? Okay, nice. Still going down. Okay, so I think I'm quite satisfied with this trade because I have nothing to worry about that, right? Do you agree? Do you want to close it now? For example, now you have a nice trade. Do you want to close it earlier? Close now. Or you rather want to let it run? Let it go, right? If you remember this song, right? From the Disney's, I can't remember the name, the winter what? Or the ice miracle. I don't know. Let it go. Let it go. Okay, so yeah, because this is not going to give me any risk, so I just put a stop loss to my break even and just hold. I just enjoy the trend. Okay, and the trend really starts. So let's enjoy it. And you don't just close it early because you know that a big profit will come. A big profit will come when it hits this daily gap. Okay, 142.50. So you just set a profit taking point and just let it go. Okay, just let it go. So by doing this live example, I really hope that you guys understand how to catch a risk-free trade and a big striker, a big winner. Have you learned that? If you understand what I'm talking, if you learn something for today, learn something from my webinar today, give me 6. Give me 6, right? Because 6 in Chinese means very good. Okay, 666 means victory. 666. Okay, good. Okay, 100 people in our room. Wow, congratulations. I think this means that a lot of people want to learn how to trade instead of, hey, Jack, give me some trade. Where's your signal? Do you offer signal services? Right? It's better for this. Okay, do you want to learn to master the skills of trading, or you rather want to, hey, Jack, just give me some trade. I'm losing, badly. I'll have lost all my savings. Just give me some trade. Can I short gold? Can I short sterling? Can I buy gold? Right? Whatever thoughts. Okay. Why do you want to waste your time of begging other people to give you a trade? Why cannot that you go for learn for yourself and mark the skills for yourself, trade for yourself? Yeah, I know, Bester. You're watching record videos now. You're watching live, right? Do you feel excited? Okay, so yeah, just Hannah, we just cover for more markets, right? I think it's end of story of this study and trade. I'm not going to take anything about it. The only thing if I'm going to do is I may catch some pullbacks to re-enter my short to sell some more because I have winning, right? Today in this morning my account is about 3,000 and now it's become 5,007. And in just 2 weeks ago, you can see here, right? You can see here I have already made sorry, this is 218. Let me just show you from last week, right? Or this month. Okay, I have just withdraw 2 times of my profits from 6,004 and 7,000, right? You can see here on April 4th, I just withdraw 6,004, and just April 11th, which is the day that I was in Hong Kong, I made a sale of sterling yen and made a 7K profits, right? Remember last oil trade, all right? I made 1,000 profits, okay? So I have already made 13,000 profits now, and now I still have 5,700. I turned another 3K capital into 5,700, right? So this is what we call professional trading, because I can enjoy my profits, I can withdraw it and use it for my own livings. Right, so this is a message I want to pass you guys. Okay, don't always put money into your trading accounts. You should withdraw the profits, right? For good traders, it's always that to maintain your capital and to constantly withdraw profit and to enhance your life, enhance your families, enhance your children, enhance your financial status, and finally you can catch the financial freedom by doing professional tradings. Euro yen will be same thing, right? Because sterling yen is going down. What do you think about euro yen? Of course, euro yen will going down. You see here, it's same thing. Okay, this is what we call correlation trade, right? By doing short sterling yen, you can also consider short euro yen. It's okay, right? Because euro yen also breaks the structure as well, right? So you can take either of the trade, but don't trade both of them, right? All right, good. So let's move on to gold. Yeah, things a lot of people are asking of gold. Let's just take a look at the gold, right? So initially, I was thinking that gold have a very strong support from 1 to 84, and we want to catch a buy. Actually, the buy here is quite successful. It actually gives us an engulfing candle to 1 to 90, right? And then an inside bar breakdown happens, right? Which actually turns the trend into downside again. And today, we just saw in 1 hour ago, in 3 hours ago, the gold breaks down the 1 to 80 level, right? So this is what we call a genuine breakout. So what you can do is, okay. So what you can do is, right, things we already know the direction because the market has chosen the directions. It breaks down the important support. You can see the support is very, very strong in the past few weeks, right? It's strong support, and today just breaks down. What you can do is, sell the pullback short, right? Sell the pullback. 1 to 80 is very good place for you to sell. And into 30-minute chart, right? You can see here, the best place is actually at 1 to 82. in 30 minutes chart, the best place to sell the gold is from 1282. Okay, so just remember my words, right? If you see a pullback to 1282, you don't think that it's turning up, going bullish. No, it's just pull back to the broken structure. You should sell. Okay, take sell from here, right? That will give you a very, very strong trade so that you can enjoy the next wave of setting. Okay, because let me just show you these moving averages. Okay, the moving averages told us, you know, it's okay, here, right? Can you see that the price has already been broken the structure and also been broken the 89 EMAs? Can you see that? The blue colors moving averages. Can you see that? Hey guys. Yeah, this is 89 EMA. We call it, it's actually a long-term trend determination EMA. So when the price is below these 89 EMAs, it actually gives us a clear sign of bearish signals, okay? Because if it is a bullish trend, it should be stay above the EMA 89, okay? Right? You can see here, since the price breaks up 89 EMA, it just keeps ready, right? Pull back already, and now it's actually a inside bar breaks down, right? Inside bar breaks down, finally it confirms the breakdown. So this is a very, very clear sign that the gold is negative. Gold is bearish trend now in daily chart. And by saying this in daily chart, it tells you that the gold is not going to stop until it hits a strong support. Where is the strong support, guys? I think the first support is 1251 because of this structure. The second support is going to be the 618 level, which is 1231. Right? If the gold fails to support 1231, it will continue moves down to test the 78.6 or 86%. Okay, so just we can see that clearly there's a very, very good profit zone of this bearish trend. Not 1267, right? It should be 1250 or 1230 or even 1200 level. Okay, by showing this to you guys, I want to emphasize that since we already know the potential gain is this much, what can you do now? Do you want to grasp this trend, this future trend? Or you rather you want to keep buying? You want to, buying, you want to taking these falling knives, catch the falling knives. Which one do you prefer? You want to buy here or buy here, buy here, buy here, keep buying when the bearish trend starts. Or you rather want to sell and hold, sell the high, sell the high. Which one you prefer? If the price move in this way. Okay, breaks down, pulls back, breaks down again, pulls back again, breaks down again, pulls back again, pulls down again, pulls back again, right? The price move like this. You want to take this bottom side. Which side do you want to take? You want to take the buy or you want to take the sell? Which one do you prefer? Yeah, take the sell, right? Easy money, right? Because the trend is going down and we have a lot of space for the trend to continue moving. So yeah, the smartest way is to sell the pullback, right? All right, so when the price, okay, form something like this, a big red candle, okay, a big red candle, then plus a sideways patterns, right? We call this is a drop and a base. And when the second breakdown occurs, it just creates a new low, right? Right. So you can either sell the breakout, or you want to sell the breakout and put plus the pullback. Right? It's actually you have two chances to catch the trade. Okay. Right. So don't pick the bottoms. Don't pick the bottom. Find the pullback to sell. Right. For today, I'm going to show you that how to use multiple time frame for you to catch the trade. Okay. You can see here, remember in 30 minutes charts, we know that this is the best place to sell, right? From 1 to 82. What happened if the price failed to bounce to this level? What are the other levels you can choose to help you to take the trade, right? Then you can see I have already making my 89 EMA here, right? You can see the 89 EMA is going down, right? The 8 EMA is sideways right now. The price is going down. We don't want to chase a price. We don't sell the low. So can you utilize this 89 EMA plus the left structure here? Can we? All right. So if the price going to 1 to 78, you can start to sell. When the price right to 1 to 82, you can sell some more. And just put your stop loss above 1 to 85, right? And then you will enjoy a very nice trade when the price finish the correction move, okay? Because this is a dominative move, okay? This is a major trend. Breaking down is a major trend. And a rally is considered a correction move, right? So you have to understand what is a major move, what is a correction move, okay? A major move happens, break new low to tell you where's the trend, and the correction move helps you to find a pullback to sell, to join the trend, join the major move, right? That's the how we interpret about corrections. Okay, so you can consider sell from 1 to 78. You take one short, and then just get ready when the price is ready to 1 to 82. You take another short, and your average price will be 1 to 78 and 1 to 82 in the middle of it, right? Your average price will be here, about 1 to 80. Okay? By doing this, we'll find a very nice pullback place to short the gold, and you are not risking too much money, all right? And then you can enjoy the next wave of a major move. A major move will continue to break the new low, right? The ABCD patterns, or in daily chart, that it's just starting off the bearish trend. It may continue to move to 1 to 50, 1 to 30, right? All right, and in either ways, you're going to make a lot of money. So this is what we call a multiple time frame analysis. This is very important. This is actually a quite advanced skills for professional traders. Okay, we call multiple time frame analysis. Can you understand? Okay, because we start analysis from the daily chart. We know that the gold has a very strong potential to going down, right? And then we don't want to sell it now. We want to sell it someplace higher, okay? And we want to sell a good pullback. And we go to the 5-minute charts, we found the 89 EMA here, we found the left structure here, and we decide our entry price from 1 to 78.61 and 1 to 82.31. And in average, if both of the trade fill the order, we enter the trade, you'll get an average price about 1 to 80. And just calculate, if you're risking 50 pips, okay, a $5 risk of the gold short, and you hold from 1 to 80 to 1 to 50, and you earn $30, what is the risk-reward ratio? My question is here. Can you calculate? If we sold gold from 1 to 80, right? Stop loss at about 1 to 85, by risking this $5, okay, distance, all right, and hold the short till 1 to 50, okay, our profit is about $30, right? So the risk reward ratio is 6 to 1. reward risk ratio 6-1 or 1-6. Basically means if you risk $1, you are going to have $6 back. And do you want to trade this? Do you want to join this trade? Guys, I have already told you both sides of the coin, right? The bad side is you may going to lose $5. But the good side is you may win $30. So you're actually taking a risk of $1 in exchange of a $6 profit. Right? If you risk $200 and this trade goes right, you're going to take back $1,200. Do you think this is a good plan or not? We know the direction of the major move, and instead of selling from here, right? If you sell the daily chart, you sell from here from 1 to 74, you're going to risk about $10, and your risk reward ratio will be about 1 to 3. But by doing multiple time frame analysis, you're going to have a better risk reward ratio, about 6-1. So for the same risk of $200, you're going to win double of the profits than by doing the plan to sell directly. You feel the difference, guys? Do you feel the difference? Right? So our higher time frame analysis gives us a clearer trend, a clear profit zone, okay, profit target. And by doing a lower time frame analysis, give us a better entry, a better risk reward ratio, right? So by doing this, you're going to have a super good trade that is risking the lowest of money, the lowest of the risk, taking the lowest of risk, but by enjoying the highest of the profit. So that is what we call a nice trade, a high quality trade. And I really hope that you guys can learn this. And just imagine, okay, let me ask you a question. If every trade, okay, in our life is 1 to 2 or 1 to 3 or 1 to 6, right? And if we have about 50% winning ratio, okay, what will your trading results be? And do you need to worry about a single trade loss? Just think of these questions. Right? If every trade in your life, you make the same analysis as I did, right? You make the higher time frame analysis to pick the trend, to pick the directions, to determine where is the next target will going up or going down, which one is more, give you more profit, right? You know that, okay, yeah, gold is bearish and I want to take short. And then you go to smaller time frame, you go to lower time frame to find the perfect place to take your trade, to utilize, to optimize your risk and optimize your reward so that you will have a 1 to 3 to 1 to 6 risk reward ratio, right? If every trade you're doing by this way, and in long term you're going to have about a 50% winning ratio, what will be your trading results looks like? Are you going to worry about, oh yeah, oh no, my God, my gold has just hit my stop loss, too bad. Oh no, the trading is too bad for me, you know, today I just lose $200. Yeah, my life is doomed, right? Are you going to make this kind of a statement? Or you're going to have a better feelings that, okay, things, right, my gold trade just now making me a loss 200, right? It's okay, it's only 2% of my capital. Let's move on to the next trade, to the next high property trade, right? Let's just keep moving. Okay, I found a sterling yen, I found a euro dollar, I found the oil, right? It's all kind of patterns, all kind of new chunks, right? And for every chance you just made, you're trying to find this high quality of trade, right? And I think just like the life, right? Life will carry on, right? Even today you have a bad day. The next day when you wake up, you still have to face your life, right? C'est la vie. You have to move on. You have to carry on. You have to do the right things, right? If today you are blamed by your father, blamed by your by your parents, or you are fired by your boss, are you going to die today? No, right? You have to carry on. You have to hold on and to move to the next. To have the next day coming and just keep doing your best way, right? Show your attitude, how you to makes your life better, right? So it's same thing of trading. Today you may have been losing trade and you just oh my god, it's too I cannot stand, I cannot carry this this damage, right? $200 2% is too much for me, right? And I think I rather quit trading, right? Is that correct? No, you don't need to do, because you know that you are doing the right thing. You know, in long term, right? When you keep finding high quality trade, the result will take care of yourself. Do you understand, guys? Do you understand the saying of I keep doing right thing? Okay, which means in trading is keep finding high quality trade. Okay, the result will take care of itself. And this is what we call confidence. And this is what we call belief. Okay, you have to have some belief of your trading systems, right? This is very important, guys, because a lot of the times, if you have by thinking in this correct way, in this positive mindset, it will carry you to go through every difficulties, every problems, every bad days. You will overcome your short side. You will overcome a lot of things, and you just keep going on, and you're doing better and better. Okay, so I think you guys need to take a screenshot, or you want to write it down, because this is a very, very honest and true experience from a 10 years experienced trader, from a TradingView top author, from TNT Sunrise, from Jack, from me. If you want to trade like me, if you want to have the similar result like me, you have to remember this. No one can stop you to find high quality trade in the future. You have to push yourself to keep finding high quality trade in your whole life, in your trading careers. I don't know which day you're going to quit trading. I don't know. I cannot tell, right? But I can tell you guys is, as long as you're going to trade, as long as you're in this market, right? Don't just risk your money. Don't just throw away your money. Throw your money into the water and without having a sound. You have to do the right thing. You have to think carefully. Okay, which direction I should pick, buy or sell, right? If I decide to buy, where is the entry point? Where is the stop loss? Where is my target? Is my target above 2 to 1, 3 to 1, 4 to 1? Right? You have to keep thinking this way again and again. By doing this, you'll be fine. Trust me. I guarantee you a success. By doing the right thing, keep finding high quality trade and trade your plan. The result will take care of itself. You're going to be rich, right? Do you want to be rich? Do you want to earn 1,000 or 10,000 or 100,000 US dollars or even $1 million in your trading career? Yes, right? And then just write down this sentence. Remember it. Memorize in your heart. Makes this as your key motivations. You have to trust this words, right? Okay, so this is something I want to share with you guys today. It's actually more important than technical analysis. right? Because even though you learned all kinds of technical analysis, right? If you failed to doing this, you'll be stopping trading in one day when the time that by the time when you feel that you're a loser, or you just having a bad loss, or you have a very you suffered from the loss, or you have a no confidence at all. You may doubt yourself. Oh, am I doing the right thing? Can I still trade? I have lost maybe 90% or 50% of my money. Can I win it back? Right? Definitely, the rainy days will come. But my question is, are you prepared for this? How are you going to overcome these obstacles, overcome these bad situations, and keep moving? Is by doing this. Okay? It's more important than technical analysis, because that is basic. That is a habit. That is a professional skills. But the mindset, okay, the psychological part is actually more important, because I cannot make a person who doesn't believe in himself to make him a good trader, right? If I'm going to pick one student to become, to become my apprentice, right? My first requirement is, hey guy, hey man, young man, do you have confidence? Do you believe in yourself? Are you going to carry on even though you may made a lot of mistakes? You may suffer suffer from the losses, right? I don't want to have this kind of a trader in my team that just a one trade or two trade or even five trade in a row that he went wrong and he just give up. If a person is too easy to give up, right, he will never reach the milestone. Okay, are we good? Some people said the euro dollar is in profit, right? Yeah, it's in profit. Good. So now do you have more confidence about our trading system, about their trading plan? Do you have it? This is a perfect example of a live trade, right? We catch the sell from 1.1302 and now it's 1.1298. You have 10 pips profit, right? Yeah, and just doing the right thing. When he wanted to take some profit, okay, move stop loss to break even. Okay, nothing to worry. Okay, don't be panicked. Okay, you have to trust our trading system. All right, move on. Dollar Canadian. Okay, dollar Canadian is a clear buy. Okay, because 1.3340, the neckline is broken and price pulling back also to the 89 EMAs. So try to buy the dollar Canadian from 1.3340 to 1.3350. All right, try to buy from this, right? So you will enjoy another rally to 1.3424 at least. And in higher time frame, maybe you can catch a nice rally to 1.35. Is the previous structure of the resistance. Okay, so dollar Canadian, buy the pullback and trying to catch this move. SPX, yeah, SPX, right? My view not changed, okay, because in daily chart is actually testing the previous high, which we call the supply zone, and you should consider to take short, because the closer the S&P is in this selling zone, right, the smaller risk you'll have and the more profit you have. Okay, and in 1 hour chart, it actually makes a rally just now. You can see here, this is actually a inside bar break up, right, but it failed to maintain it, right, and the price going to retesting this structure. And if you sold just now, you actually already have made money. And yesterday we have a short from here, okay, right? Then I think this trade is a losing trade. We have hit stop loss here, right, because the price broken up. So you take the first trade of a risk, the loss, you take it, you face the loss, and then you take another trade, and the result will be good. So S&P long-term wise, I'm thinking to short because it has already hit into this supply zone, a lot of institutional players is trying to sell the S&P to those novice buyers to chase the high, okay? And when the institutional players, okay, filled all the orders of the buying, the demands, when the demands become to zero, it will just fall, right? Dollar yen will be very, very similar to S&P. The dollar yen is already facing the resistance, okay, and today the dollar yen makes I think the inside bar breaks down, right? So in 30 minutes charts, it's still sideways markets, right? It's still sideways markets, still not changing directions, okay? You can see the 89 EMA is still here. So I think there's not much room for us to catch some trade from dollar yen, right? You want to wait for the breakout, okay, or you want to wait for the breakdown, okay? By breaking in either directions, you may have some clear mind. All right, good. Let's move on to oil. The oil, right? If you remember in my last webinar, we catch a nice fall of this, right? And then I said, yeah, you can sell the oil as long as it didn't break 64.80. So by having my trading plans, right, for those people who listen to my webinars, you can sell the high whenever the oil going to 64.40, right? Just take a sell, stop loss above 64.90, right? You can sell it, you can enjoy a lot of money from here, from here, from here, okay? And now the oil looks like it has already breaks down today, okay? Breaks a new low here, okay? But then it rallied back, all right? However, it fails to break new high. So I think the trend is changing to bearish trend. Okay? The 4-hour chart, okay, you can see the oil failed to break new high, and this ranging section still maintains, not yet really broken, not yet, okay? But just wait for the broken candles to happen, right? Wait for the broken candle, wait for the big red candle to happen like this, okay? Just wait it, okay? And then pull back yourself. All right, good. But don't buy. You don't want to buy because you don't know when it will break down, and your stop loss will be quite big because it's you have to set a stop loss below 62.93. It's about 60 pips, right? And you are going to have about 80 pips win. So it's not close to 122. So it's not worth trying to take a buy. I think sell is good. Selling is better. Okay, let's move on to Bitcoin. So Bitcoin, okay, strong rally to 5,004, as I mentioned in my trading view in last year, if you remember, okay, in December 26th, yet Christmas Day, right? After Christmas Day, I sent a Christmas gift to all of you guys. I said we can buy from 36.61, and if you remember this trade, you already win a lot of money. Okay, so just hold it and take some profit and let the rest go. It's still the same plan, okay? Having a risk-free trade, right? You can see here. What from here? 36,000, sorry, 3,006. And now it's 5,004. And you can see here the buyers are so strong about now the BTC stands above 4,008, right? So as long as the BTC is above 4,008, still bullish, you can still buy the low. Okay, but the target is here. Okay, the daily chart here. Okay, the BTC has already completed bottoms, right? But we have some resistance of this level. So the BTC have to break this level before it makes the next rally. Okay, it has to break this level and pull back, and we can buy it again. If the price moves like this, it's very good. One questions, okay. Johannes asked me one question. Why don't you consider these double bottoms? Okay, it's good questions. It's good questions. Okay, so let's go back to the oil, and we go to 1-hour chart. Okay, I know what you're talking. You say this is a double bottoms, right? Am I right, Johan? Are you talking about these double bottoms currently 1-hour chart? Okay, yes, It looks like a double bottoms, right? But it hasn't break the neckline yet. This is the first thing. Second, do you think a double bottom will appear in a high place or in a low place? Do you think a double bottoms will appear here or some place when the price is really low, like here? Which double bottoms do you think is more profitable? It's a bottom, Johan. It's bottom. It's not top. A bottom better to occur at a low place when the price is low, keeps falling, right? And then you find out double bottoms. And then you take a reversal. Wow, it makes a lot of money. But you don't want to take about double bottoms occur at a high place. Because in high place, because if you go into daily chart, you can see there's no double bottoms at all. It's just a doji, right? Just a doji. Where's your double bottoms in daily chart? Nothing, right? A doji means sideways. But previously we have a very bearish engulfing candle, a pin bar retesting tells you seller is stronger, right? So it's more likely to fall down instead of rally. You have to consider the location of your double bottoms. All right. Okay, I think we have covered a lot of things there, and we captured a nice trade of the euro, of the sterling yen, right? Let me just look at the sterling yen. Where are we? Yeah, 146.05. Good. Yeah, just see that pullback happens. Right? It's done again. If you sell the pullback, you should already enter. In middle, then you don't consider neither double bottom or double top, because in middle it will be more likely a trend continuation. Okay, so I want to give you guys a clear answer of tops and bottoms, right? So bottoms will occur like this. Okay, a double bottoms in a low location. This is double bottoms. And then if you see something in the middle, okay, it's not about the top or bottoms. It will just be trend continuation, because it can give you a lot of similar patterns, like okay, you can see, oh, maybe this is a double top, or maybe this is double bottoms, right? But in middle, it will just be trend continuation, okay, before it breaks the neckline. So if it breaks up, you know the trend is going up. If it breaks down, you know it makes a reversal, right? And only when the price rally to a very, very high location, and you will start a double top, okay? And then you start to make a reversal trade to sell from here, okay? So this is a general graphs of market cycles, okay? And you want to take a short, you want to take a short whenever the price pull back. When you see the trend is still going down, you just take short, keep shorting until it reached in a very low place, okay? Until it reached in a very low locations, okay? The price is really very cheap. A lot of people want to buy, and then you want to see, okay, I saw a double bottom from here, okay, right? And then pull back, you want to buy, right? So by giving you guys this chart, you understand where is your best trading opportunities, okay? And when the rally becomes, you just keeps on buying the low, right? Keeps buying low. So you want to be the smartest people, okay? Smartest people, okay? And find the double bottoms at the low location, find the tops in the high locations, identify the neckline, right? But when in the middle, just wait for either trend continuation or reversal. Do you understand? This is very, very advanced level. I'm glad that you asked these questions, because by asking these questions, you finally understand how important a higher time frame analysis is. Because if you only look at this place, you will be lost. If you only zoom in here, okay, you will never know, oh, is this a sideways or is this a double top or double bottom? But by looking in the big picture, you know, okay, in previous is a bullish trend, and a sideways a little bit, corrections, a sideways or flag pattern happens, right? It may either breaks up or going down, so you have to wait for the direction to come. Okay, find the tops here. Tops will appear here. Okay, bottoms appear at a low location, right? So only these two patterns will give you a very, very nice reversal trade and a very, very nice risk reward ratios. Are we good? It's really, really a very, very profitable way by finding the correct double top or double bottoms in the chart. You have to take into consideration of the location. Well, so I think I hope that my explanation satisfies you, that you have no doubts about these questions, and you'll be enhance your trading system, your eyes better. Okay. And that's end of our webinars today. Yeah, it's about 1 hour and 20 minutes already, and it's close to midnight in Singapore and in China. So good night, guys. Have a nice trade. And for those who want to join my course, for those who want to be my students, okay, you can simply go to harmonicasia.com to sign up your course here, right? You will know what you will get, okay? Right? The best investment is not stocks, bonds, or properties. It's you. It's yourself. Right? Invest your brains, invest your knowledges, okay, to catch the good trade. Right? Okay. So thank you, guys. See you later. See you next week. Bye bye.